Maybe a few showers and mild temperatures in the 50s, turning colder by week's end. On the Money Matters Radio Network, I'm Mark Rosenthal.
If you're living with dry age-related macular degeneration or dry AMD, you may be at risk for developing geographic atrophy or GA. GA can be unpredictable and progress rapidly, leading to irreversible vision loss. Now there's something you can do to
slow it down and get it going slower.
Izervay is proven to slow GA progression.
Izervay gets GA going slower.
Izervay or avacincaptad pagel is a prescription eye injection used to treat GA. Don't take it if you have an infection or active swelling in or around your eye. Izervay can cause eye infection, retinal detachment, or increased risk of wet AMD. Izervay may temporarily increase eye pressure. Your vision may be impaired after an eye injection or exam. Don't delay. Ask your doctor about Izervay today.
Izervay gets GA going slower.
Visit Izervay.com. That's IZERVAY.com.
Paid for by Astellas Pharma.
Hey parents, you don't need the latest gizmo slang or clothes to be a perfect parent, because kids in foster care don't need perfection. They need you. For more information on how you can adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services, Adopt Us Kids, and the Ad Council.
This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child, plus you, who sold the house, might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean Paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Welcome to the Financial Exchange. Mike Armstrong, Paul Lane, Tucker Silva with you this morning. Paul, Tucker, quick question. Do you know of any of our listeners who physically live under a rock?
Not that I know of.
Okay, then in most cases, I'm guessing everybody has heard that tariffs went into place 10 hours ago on Canada, Mexico, and China. They are now in place. You are hearing announcements from private companies, the leaders of those governments, retaliatory tariffs, predictions of recession, higher prices, how impactful it's going to be here in New England versus other parts of the country. And I'm here to say that at this stage, it's pretty much all conjecture. I want to try and start off with what we do know at this point in time, how markets are reacting, and then we can, if we want to go off on baseless conjecture, we can go from there in the next segment. Let's start with that.
I will say, you mentioned the markets, Mike. I did have somebody approach me and ask me yesterday why the hell did markets sell off so much, and I had to inform them remind them of the tariff deadline. And they're like, oh
yeah, got it, yeah.
Drinking game at home for all listeners. Every time we say tariff today on the show,
I'm already
hammered.
One
back.
Don't take a shot. You will die. So yesterday you did have the S&P 500 fall about 1.9%. At the worst, the Dow Jones Industrial Average was off about 800 points, closed down closer to 600. We are closing in on that territory again today. And I think one of the key messages from us over the course of the last month was, whether you believe Donald Trump or not, investors are not believing him leading up to these tariff announcements that got reaffirmed yesterday and went into place overnight. And that was a major theme of the program over the course of the last month, is investors aren't buying it. And the problem would be, hey, either someone's got to blink. Either the markets are going to sell off because the tariffs are real, or The White House is going to blink and suspend these again, in which case they're going to face a credibility issue. And I think whether because they genuinely want these tariffs in place long term, or they are merely trying to regain credibility in future negotiations with Canada, Mexico, China, and Europe, I don't know. But in either case, these tariffs are real. They are in place now, and we need to start planning as though they exist. So markets, like I said, in early trading, percent, a little bit worse on the NASDAQ, a little bit less so on the Dow. We'll keep you appraised of that as investors continue to digest what this trade war might mean. But let's start with some basics, because plenty of people who are smarter than me have calculations on what this actually means in terms of imports and what happens here. So let's start off with China, because China's already been facing many tariffs since 2018. And these new ones will bring up prices of imports from China a little bit more. But at the end of the day, they've already been facing them. So there have been 4 tranches of tariffs on imports from China that came into effect in 2018 and 2019. These new tariffs that are going to be put on China, which increase it an additional 10%, will bring that average import rate to about 24.5%. However, the bigger impact of all of this is that average effective rate was just on those goods imported from China that were actually paying the tariffs. And you might have heard of this de minimis exception that existed prior to. That was where anything with a value of under $800, so pretty much anything you could buy on Shein or Temu, because I don't think they have anything over $100, quite frankly, would not face those tariffs. Under these new rules, those items imported will also face that tariff. And so in all, you're probably talking about a higher rate of tariff. We don't know how they're going to do that, because right now, U.S. Customs doesn't really have the ability to go and open every package that's under $800 in value from China. But nonetheless, that will likely happen. You will also likely have an increase in companies trying to skirt those tariffs by rerouting orders through Vietnam, and other countries, Malaysia, other areas that don't have these same import tariffs, because guess what? They've gotten pretty good at it over the course of the last 6 years to try and avoid these things. The newer ones, where these countries are very unlikely to try and skirt these tariffs in any meaningful way, have to do with Canada and Mexico. So when we talk about Canada, Mexico, and China, those 3 countries, according to import data from 2023, which as far as I know is the most recent we have, represent 43% of all goods coming into the United States. Close to half. That also represents about 5% of U.S. gross domestic product in terms of those imports. Most recent data, right? So if you take a look at all goods imported into the United States from every country, the average effective tariff rate most recently was about 3%, according to data analyzed by Schwab from Bloomberg. With these new tariffs, if people didn't change their behavior, huge caveat, right? Because maybe you're going to go look for avocados and tomatoes from the United States instead of Canada now. But assuming you displayed the exact same behavior, that average effective tariff rate on everything coming into the United States goes from 3% to 10.7%. Huge jump. I think, plain and simple, that's a massive jump. And that would represent the highest effective tariff rate that you've seen since the 1940s. Are we good with the numbers? Mm-hmm. Have we? I know we're going to talk about a lot of additional numbers, but that's the basics. The average effective tariff rate will more than triple, assuming people don't change their behavior, which they obviously will, but certain things can't be changed. We just don't produce enough avocados in the short term to satisfy Americans' gluttonous demand for avocados. We do not have the ability, Ford does not have the ability to build a transmission entirely in the United States in the next couple of months, so they're going to face tariffs on those items. We do not, in the Northeast, have good infrastructure to import oil and refined gas from Louisiana, so we're probably going to import it continually from, a lot of it at least, from Quebec, Montreal, where a lot of it gets sent to after being refined. So in the short term, I would expect the average effective rate to approach 10.7%, and then ultimately maybe slow down a little bit. That is the highest tariff rate that we've seen since the 1940s. So anything to add, Paul, before I kind of conclude this first part of this argument here? Because it was a lot to digest. A lot of people have put a lot of good numbers together. We can certainly talk, the Federal Reserve estimates that tariffs could knock 1.2% off GDP. The GDP Now calculator has already flashed negative based on some other reports that have come out recently. We can talk about sentiment. We'll get to all that. But anything else in terms of the facts on tariffs that we know so far?
You've hit the numbers pretty hard, so I'll go more big picture as to what are the strategic reasons behind implementation of tariffs to kind of speak to the 30,000-foot view. Part of it is this idea of trying to bring more manufacturing on domestic soil. I would push back a little bit against that notion just because with all the uncertainty regarding tariffs, you're not going to see Ford or GM and Stellantis, like you alluded to before, reroute their whole supply chains on something that has changed on a whim. Also, the other idea is you're trying to bring yourself to the negotiating table as the United States to renegotiate trade deals or to potentially inflict pain on these other countries so that they, like I mentioned, come to the bargaining table. Now, some of the issues that have been mentioned, concerns about drug importation, particularly fentanyl, that was another area, the negotiating tactics behind it. But I think that you do have to understand as part of this, these can lead to higher costs for consumers, and we'll definitely get into that at some point during this show. But those are sort of a couple of the things to keep in mind as to why these tariffs are being put into place, is trying to have more domestic production, trying to bring more manufacturing jobs back on shore to the United States, as well as bring yourself to the negotiating table to perhaps get more favorable trade deals.
So, again, those are the basic facts. The important one that I think we should keep in mind, this is the highest average effective tariff rate that we have seen since the 1940s. So the other conclusion that I have is a lot of very smart people talking about what this could mean. Recession in Mexico and Canada, recession in the United States, prices through the roof, stagflation. Here's how you should invest if you think this way or that way. Who's the oldest famous investor you can think of these days, Paul?
Buffett.
Yeah. This guy started his investing career in 1951. Nobody alive today has invested in a universe where tariffs are as big a part of the U.S. economy as they are as of 12:01 a.m. this morning. So I'm going to say that I'm going to pretty significantly discount any economist's view or any market analyst view of what's going to happen next, because nobody living today has any real experience in this space, and there might be a lot of arguments that end up not being true. This is going to be a highly volatile situation, and very well could pivot on a dime, as we all know. So let's take a quick break. In case I misspoke, one other area, the 25% tariffs on Canada and Mexico apply to everything except energy imports from Canada, which are facing a 10% tariff. I'd like to talk about that next and the potential effects on New England households in particular when it comes to all of this. That's next here on the Financial Exchange.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street right here on the Financial Exchange Radio Network. Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes, and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Wall Street Watch, a full update on the market's performance to date. Weekdays at 10:30, only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. And if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visitusvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025.
So impacts here in New England, wanted to focus on that as majority of our listeners right now are tuning in across New England. Energy seems to be the area that most are honing in on. I'm sure that we in our grocery stores, for example, import more Canadian produce than other areas of the country as well, given the proximity. But energy has been a key focus. And according to the Boston Globe, which actually cited the Business Council, New England imports 80% of its gasoline and diesel fuel from Canada. About 9% of electricity came from Canada and New York last year. And nat gas from Canada remains, quote, essential to New England, particularly in cold winter months, which we're probably through the worst of right now. So reality speaking here, most of our gas and diesel is coming at the gas station is coming from Canada. Mm-hmm. I would assume that some portion of that can come from elsewhere. I'm not a local energy expert, but I would assume that, yeah, we can find some of this from other parts of the country. But you're talking about a pretty significantly longer drive to get it there. You know, right now they did an interview, for example, with a very local company. Dennis Percy, the general manager of Fred's Energy, which is a locally owned customer that serves around 15,000 customers in Vermont, spoke about the tariffs and just that, hey, probably we're going to continue importing from Montreal because what am I going to do? Drive to Louisiana every few days to get my gasoline? There's just some short-term impracticalities about this. On the other hand, in response to a lot of these tariffs, you do have global oil prices selling off right now, along with equities. The price of a barrel of oil on West Texas crude is now sitting at $67.18. And so this is where the all else equal thing comes in, right? Do I expect energy costs to go up in New England? Yeah, of course. We import 80% of our gas and diesel from Canada. It's going to go up in price because you can't immediately start getting that from elsewhere. And if you do, your costs are going to rise because we have such bad infrastructure here in New England when it comes to importing energy. But if you get a massive sell-off in oil prices because of fears about recession, then that's probably not your biggest concern of the day is New England energy prices. So short term, I do expect, New England is probably going to feel more of the burden of these tariffs in terms of energy price effect than most anywhere in the country. I know there's another refinery near Detroit that accounts for a lot of the oil imports and gas imports across that area of the country. But this should be something that we probably feel pretty quickly in New England because it's not as though we have massive storage facilities of refined fuels here.
Yeah, especially Maine, they get all of their gasoline and home heating oil from Canada. So listeners up in the Portland area certainly will be impacted. At least we're on the back end, like you said, of that season. But obviously in Maine, stays colder a little bit longer. It is interesting to see on oil prices, like you were mentioned, trending down today and speaks to how global oil prices is. OPEC Plus was announcing on Monday that they plan to increase their production by 138,000 barrels per day. That's the first time they've done that since 2022. So as much as we can get tied up in the local stuff, the energy market is truly a global market, and so its impacts are far-reaching to things going on in other countries outside of what's going on here domestically.
Obviously, the U.S. announced these tariffs. Donald Trump reaffirmed them late yesterday afternoon. When did he have that?
2 o'clock hour.
2 o'clock-ish.
That's when the markets shifted.
Markets shifted and sold off significantly from there, which we'll cover next on Wall Street Watch. But that's not been the only tariff action. As has been the case previously, other countries have responded. Mexico, to this point, I have not seen any announcements from them in terms of responses.
I saw they were going to put retaliatory tariffs into effect on Sunday.
Okay. But China pretty much immediately responded. They imposed new tariffs as high as 15%, primarily on American agricultural shipments. So, again, if we're talking about regional, big problem for the West and Midwest in terms of agricultural products. Probably soybeans is a big piece of here. They also banned exports of some products to some defense companies here in the United States. Don't know exactly what that looks like, but banning some products that defense companies use. I would imagine those have to be fairly low-tech products because I don't think any administration for the last several would have been comfortable with a Chinese semiconductor sitting in a U.S. missile system.
They'll probably also ruffle some feathers on the company side of things. We talked about the probing into Google, which doesn't really even have much of a presence there in China anymore. I wouldn't be surprised if you saw a little bit more in the way of headlines of them going after some of the bigger tech names out there, possibly. This is just speculation that I'm mentioning there.
On the Canada side, the government there announced that they would proceed with a sweeping package of counter tariffs against U.S.-made products. First stage of 25% on about $30 billion Canadian dollars worth of imported goods on items such as orange juice, peanut butter, wine, and coffee. Those go into effect. Again, already in effect, 12:01 a.m. this morning. They're planning a second round of tariffs to be placed on an additional $100+ billion worth of goods. Those would go into place in 3 weeks, and that would be more retaliatory. So we're talking about cars, trucks, steel, aluminum products, just as the United States has done. And so, again, if I'm going to take a potential for good news here, I think Justin Trudeau is trying to leave the door open for negotiations. But speaking of Justin Trudeau, I believe that the elections for the next Canadian Prime Minister are happening in something like 5 days. So I don't know who is going to be leading Canada in these negotiations when all is said and done. I believe they're just parliamentary elections, not full Canadian elections, but nonetheless, that will be obviously interesting. And I think, again, what I see here is both Mexico and Canada attempting to leave the door open for negotiation. Canada saying, hey, we will be implementing bigger retaliatory tariffs in a few weeks. Mexico announcing very little and delaying implementation of anything for a little while here. So this is going to be a volatile situation. It can change rapidly. We'll keep you appraised. But next, we've got a full market recap with Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans in their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically, you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can can a financial advisor do for me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are extending their losses from yesterday's sell-off in reaction to President Trump's implementation of tariffs on Canada, Mexico, and China. Yesterday marked the S&P 500's largest single-day loss since December, which shed 1.8%, and the tech-heavy NASDAQ sunk 2.6% yesterday during that sell-off. Right now, the Dow is down by 583 points, or 1.33%. S&P 500 down nearly 1.5%, or 84 points. In the NASDAQ down another 257 points, nearly 1.5% lower. Russell 2000 down nearly 2.5%, or about 51 points. 10-year Treasury yield down by 4 basis points at 4.13%. And crude oil is off nearly 2% lower, trading just above $67 a barrel. After its plunge of 9% yesterday, Nvidia shares down another 2% today as investors are showing concern about the potential for further export restrictions that could curb the chip maker's business in China. Several auto stocks are also seeing losses on the tariff news, including General Motors, Ford, and Stellantis. GM down by 4%. Ford is retreating by 2%, and Stellantis down by 7%. Tesla shares also retreating 6% after data from the China Passenger Car Association showed the company's sales of vehicles made in China dropped nearly 50% last month from the same period a year ago. Meanwhile, Target posted fourth quarter earnings and revenue that beat expectations. However, the retail giant warned that the first quarter will see meaningful year-over-year profit pressure given tariff and ongoing consumer uncertainty. Target shares down by 4%. Sticking with the retail sector, where Best Buy also beat earnings and revenue forecasts for the fourth quarter. However, the consumer electronics retailer also expressed tariff concerns, where it said price increases are highly likely as a result. Best Buy down by 13%. Elsewhere, Illumina shares down by 2% after China said it would ban imports of the biotech company's gene sequencers in a retaliatory move to the tariffs. Some green to report actually today. Okta shares jumping by over 18% after the cloud software company posted strong fourth quarter results. And after today's close, we'll see earnings from CrowdStrike. I'm Tucker Silva, and that's Wall Street Watch.
Just a little bit more context for everybody in terms of market reaction, not just today, but over the last few months. So for the peak market, right, in terms of where we reached the all-time highs on the S&P 500, that was reached back on February 19th when it closed above 6,100. To today, we're sitting about a 6% market sell-off from that peak level to now. Year to date, it's a different number, but that's about where we are in terms of a market sell-off on the S&P 500. A lot of people talked about that Trump bump after the election. Depending on how you define it, I'm defining it as close of markets on election day to end of year. You did see the S&P 500 rally about 1.7% at the end of last year. Today, compared to the election, so markets closed on election day at 57.83 on the S&P. We're now sitting around 57.62. So markets are officially now down for the first time since the election news of President Trump taking office. And again, I don't think that this is a particularly massive sell-off. We're talking about 6% off of the all-time highs, and so we talk about volatility, but it's important to contextualize all that. But for a frame of reference, that's where we sit now with the most recent 2 days of volatility in reaction to the new tariffs on Canada, Mexico, and China.
Yeah, I think it's worth talking about. Obviously, we've seen the sell-off. Why are we seeing the sell-off? Well, the big broad word is tariffs, of course. But if we drill down to maybe giving listeners a sense for what are some of the concerns that come with tariffs. You know, some of them we've spoke about in this program already, but I'll reiterate some others. You have retaliatory tariffs that can come back, and we've talked about some of those. So we are imposing tariffs on imports from goods overseas, or in this case, in Mexico and Canada and China as well. They are coming back and sending retaliatory tariffs our way in terms of what we export. So what could that lead to? Potentially lesser on the export front from the U.S.
Specifically where they seem to be targeting so far agriculture.
Right. Hurt the farmers.
China and Canada specifically targeting the agriculture sectors. We talked about OJ, peanut butter, coffee, probably soybeans. China is pretty much all agriculture products. I don't know where we grow coffee in the United States, so I'm not sure about that one, but maybe it's just, I guess, bagged here, and that would face the tariff. Next round, though, would probably
California,
be on
Hawaii,
other
and Puerto
items.
Rico.
Oh, good to know. Thanks, Tucker.
You're welcome.
The more you know.
The more you know.
That's where we grow coffee. Yeah, Hawaii, that does make sense. So that has been the immediate effect so far. Go ahead.
Yeah, then increased costs for consumers and businesses. We alluded to this a little bit earlier.
Because again, I think we got to dive in here.
Yeah.
Like increased cost to businesses and consumers. Let's actually talk about how these tariffs effectively operate. So you are an importer. Let's talk about that guy who had his business driving over the Canadian border with his gas truck, filling it up and delivering it. I think there's actually home heating oil in this case, but delivering it directly to consumers' households. How is that going to work for that importer of tariffs? When he crosses the border and files his returns and goes through customs, he's immediately going to face an additional 10% on the price that he paid for that oil that he filled up his truck.
Right, so let's use 100,000 just because it's a round number. I'm sure it could be substantially more than that. So, of course, instead of importing, his good for 100,000 for paying for oil or whatever the natural gas resource that he's bringing over, it's 110,000. So, okay, what is the trickle down impact of that? Think of anyone out there listening. If you're a business owner and your costs increase by 10%, there's two ways you could approach it. One, you could eat it and just say, you know what, I'm going to keep my prices the same. What's that going to hurt? That's going to hurt, of course, your profit margin. Or the alternative is you're going to say, you know what, I'm paying 10% more. Unfortunately, I'm going to have to spread this out amongst my consumers. That's the trickle down impact that, because of Fred's, energy business, when you're paying at the pump at, X gas station up in Vermont or Maine, you would have to eat potentially some of that cost increase. And it's not a pure one for one. Maybe 5% of that is absorbed by the consumer. And the same thing applies for everything. Avocados, Chipotle is going through the same thing to make it like a more, sort of reasonable thing. And I got a burrito bowl there yesterday. They are saying that, hey, we're going to eat the cost of the importation of avocados from Mexico for the time being. How long do they do that for? That's up for debate.
And every business will react a little bit differently to this. There will be some like Chipotle, who I'm guessing they don't want to be the target of anything from the Trump administration. They're going to try and eat some of that and figure out a different way. They have pretty thick profit margins, so they can afford to do so. Others, a very common reaction when you face increased costs from a business perspective that are very well known. Think about cigarettes and the increased taxes that they faced over the course of the last 50 years. What cigarette manufacturers found was, hey, people know that there's new taxes on cigarettes. They don't really know the details, and they're not running the calculations to figure out how much that should increase the price per pack, but they know that taxes are going up on these products. They're already expecting the prices to increase. What cigarette manufacturers found was, hey, we might only be facing a 30-cent tax, but we're going to be able to bump up prices by 50 cents and put that right to our bottom line because consumers know, I should expect a higher price when I go to buy this thing at the store. Will there be grocery stores, oil companies, car manufacturers that do the same thing in this case to say, hey, for instance, you're a car manufacturer. We've been knowing about these tariffs for months. We already have all this stuff in the United States. We don't have to pay a tariff on it. But if I have the opportunity to drive a higher price for that repair to my end customer, and pad my bottom line without them knowing and a big deal being made of it, I'm probably going to take advantage of that because that consumer already expects me to be delivering that higher price.
And what's been the backdrop for the last couple of years? A country like the United States that's been facing a lot of inflation. And just what you're alluding to there is this idea that that could further, enhance inflation in a bad way, that we would have to deal with that as U.S. consumers. The backdrop is so much different than the first time around when tariffs were implemented in 2018. Not only were they more targeted the first time around, they're much more broad-based this time around, and we're coming off the backdrop of inflation that peaked at 9% in 2022 and is running at 3% year over year on the CPI piece. The other aspect that I wanted to talk about is this uncertainty on the manufacturing side of things domestically. This doesn't mean, as I mentioned in an earlier segment, that all of a sudden supply chains will be rebuilt to be produced domestically in the United States. A lot of what you're getting from the Dallas Fed manufacturing survey in February and other surveys that are being conducted is that businesses on the manufacturing side are unsure of what to do. They're almost paralyzed as to what their next step should be. Home builder sentiment has reflected similar sort of thought processes. Geez, are we going to have to pay a 25% tariff on importing of lumber? Do we pause potential permitting or projects that we're working on until we see how this shakes out a little bit more?
Let's take a quick break. When we come back, I want to focus in on what could be the first items to start facing these import tariffs. And then I do want to talk about the other side of this, because very clearly the Trump administration has a reason behind this. This was a clear focus of their economic priorities heading into 2025. It's part of their plan. And so what is the other side of that coin in terms of how this could benefit United States consumers in the long term, benefit businesses, and reshape the state of American manufacturing? Quick break. That's next here on the Financial Exchange.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699. Or you can request the guide online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
We were talking before the break about what's likely to be affected first from these tariffs should they remain in place. And again, I consider that to be a huge if. I think that this could be volatile. We could see surprise announcements via social media of negotiations that occur, and I think we should all plan for that and not assume that the status quo will remain the status quo, but it is what it is for now. Among the first affected items, I would expect to be things that are perishable. So any sort of food item is likely to see a pretty quick response to this because obviously you can't store avocados for 6 months in a warehouse and expect to sell them to the general public. So I would imagine that food items imported from Canada and Mexico will face quick price increases at the grocery store in relatively rapid pace. Energy products, similar story, although we do have more storage capacity here in the United States, and I would imagine some importers have been doing so over the course of the last few months, but it really depends on where you are, right? If you're here in New England where we don't have much in the way of storage capacity, then it might be a pretty quick felt effect. Things like cars, these guys have been making their plans. They have discussed as much for months now in terms of their contingency plans upon contingency plans when it comes to these tariffs. It's not to say they won't be heavily affected because, look, to build the transmissions, I was listening to a podcast recently about following this one vehicle manufacturer's process for a transmission, and it went through something like 15 U.S. states, crossed the border 6 times before it was ready to be inserted into a car. And remember, the way that these tariffs are set up is every time it crosses the border, it faces that new additional 25% on the value. So massive increase, but to that end, these companies have been saying, get me that transmission manufactured and sitting in a warehouse in the United States sooner than later so I can build
and just
this
think
car.
about car lots. You have much more excess inventory and the ability to store it than you do with these perishable items you spoke about before.
Likewise, lumber and other items. Again, we do import a lot of that. If these tariffs remain in place for 3 months, then you're going to start facing that immediately. The importers will start dealing with it. If it lasts a couple of weeks, probably no impact. So, again, I would exercise caution when listening to anybody that tells you they know how the economy is going to react to this because, as I mentioned before, these are the highest tariffs we have seen since the 1940s. There is no one alive today who invested in a similar environment to what we are talking about. So nobody knows how the economy or markets are likely to react to this in the short term.
A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they can also be problematic. Call Cushing and Dolan, the experts in elder law, at 866-848-5699 and request their new guide. called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request their new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699. Or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
So in terms of priorities for these tariffs and what the administration on the surface seems to be attempting to accomplish, there's a very clear line being drawn when it comes to border protection and specifically people and illicit drugs crossing the border. And there have been renewed commitments both from Canada and Mexico on that front since the announcement of these tariffs a month ago on preventing the flood of fentanyl, for example, over the borders when it comes to that. A lot of that stuff does come from China. I've heard nothing from them on the subject, but nonetheless, there has been a renewed commitment on that side of things. Tough for me to understand the economic impact or measure the economic impact of such a horrible, rampant drug addiction problem that we've dealt with in the United States, the massive loss of life across primarily middle-aged men who have dealt with the opioid epidemic, although it's affected many different people of different backgrounds and women as well. It's primarily been middle-aged men dying of this. And obviously, I think any improvement that you can make to that would be significantly beneficial. The other stuff is just a little bit unclear in terms of what the goals are. Obviously, it's to bring companies and manufacturing back to the United States, and Donald Trump himself has reiterated that time and time again. Bring your company to the United. If companies move to the United States, there are no tariffs. That was a social media post that he did just today, and I won't stay here and say that that's impossible, right? Like, I genuinely don't know how much of that might occur. The question in part, of course, is how much do other countries retaliate? Because if you are a European auto manufacturer and you know that, hey, if I go and build this bigger plant here in the United States, I'm going to face additional retaliatory tariffs when I import those cars back to Spain or back to Italy, then it's an equally significant problem in many cases. So look, the initial market reaction right now is quite negative. And I think it's quite negative because investors are worried about a few things, but one big one, which is the idea of stagflation. Could these tariffs send the economy into an environment where we experience uncomfortable inflation at the same time that businesses are unwilling to invest and maybe even start cutting costs in the face of tariffs and retaliatory tariffs? I see no evidence of that occurring right now, but that is the big worry. That is the big worry right now, is a supply-type shock and recession, the likes of which we saw during the 1970s as a result of these tariffs. And that's what investors are reacting to right now. That's all the hot time we have for the first hour of the Financial Exchange, but wow, do we have a lot more to cover in the second hour. We did have some earnings and profit warnings from the likes of Target that we need to cover. A whole lot more coming up next here on the Financial Exchange, folks. Tune in.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans in their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline Qualification Line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically, you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing. Call 866-848-5699 and get your free guide today. That's 866-848-5699, or you can request the guide online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Welcome back to the Financial Exchange. It's Mike Armstrong, Paul Lane, and Tucker Silva with you on a Tuesday where markets are selling off for a second straight day in reaction to announced tariffs on Canada, Mexico, and China. In particular, what we're talking about here are 25% tariffs on imported goods from Mexico and Canada, excluding energy products from Canada, which will instead face a 10% levy. In China, we are tacking an additional 10% on everything, as well as eliminating a de minimis exception on imported goods under $800 in value. This has investors quite nervous. Yesterday, you saw the S&P 500 close down about 1.9%. Dow, I think, finished the day off more than 600 points. At the moment on the Dow, we're off over 770 points, or about 1.8%. NASDAQ down about 1.6% in early trading and approaching bear market territory of correction territory of a 10% sell-off. Overall, U.S. equities, S&P 500, down about 6.25% from the all-time highs it reached just a few weeks ago on February 19th. And Yeah, we've got businesses across the country discussing tariffs and announcing what they think it could mean for their businesses in 2025. And I think we can start right there with Target, who warned this morning that tariffs and consumer uncertainty will hurt their profit for the year, and they expect to raise prices in reaction to tariffs that they are likely to face on a broad swath of goods that they sell to American consumers.
Yeah, what we've seen from Target, they've struggled in this retail environment over the course of the last 6 to 12 months or so. It does seem like consumers are more focused on gravitating towards Walmart and Amazon and Costco for lower prices and better delivery options. The stock was as high as in the 150s or 160s. If you look back to the fall, it sits at $113 today. And in terms of the commentary that they presented in this most recent earnings report, the earnings that they provided for Q4, those were satisfactory and beat some estimates, but the concerns really were more for this upcoming quarter, and in particular for the month of February, they saw a net decline of sales of about 1% and did allude to the fact that some of these tariffs could be something that presents a challenge for Target going forward. One of the things that they're looking to invest in is right now they source about 30% of their products from China. They're trying to get that down to 20% in the next 4 or 5 years or so to mitigate some of the impact of tariffs and diversify their supply chain a little bit. But Mike, Target has struggled really, compared to those peers that I mentioned. They haven't been as successful. So as much as they allude to consumer confidence weakening and some concerns about sales trends, I'd like this to be echoed by other major retailers too before I fully buy into the trend.
Yeah, I'm wondering how much of this is some tariff scapegoating that Target's trying to accomplish here, because what they mentioned is that their February sales, that's a tough couple words, fell year over year. Right. And specifically, that had nothing to do with tariffs.
Yep.
Right? Like, maybe consumers were less confident in February because they expect tariffs. Maybe it was cold weather. But to sit here and say, oh, yeah, tariffs are affecting our business already. Well, not really. Your bad business management seems to be affecting your sales so far. In February, you saw a year-over-year drop in sales, which is not a great sign. Again, could be weather-related, could be other things, but Target, as you mentioned, has very much struggled to shine the same way that Walmart has done. I mean, Walmart has genuinely convinced investors, right or wrong, that they are growing fast and are the kind of end-all, be-all for consumers these days with their grocery business and others. And Target, I think, has been attempting to imitate them in some ways, and that could come at the wrong time, right? Expansions of their grocery business might not be great if you are suddenly facing higher prices from imports of Canadian and Mexican food items. So it'll be an interesting path for Target here. I myself was shopping there with my 3 kids and wife last night, and
what'd you get?
Like a $250 spring clothing bill, because these kids, I don't know if you knew this,
they're
kids
expensive?
Grow fast.
Oh, yeah.
And they are really expensive.
Yeah.
So which is why we buy all their clothes at Target.
My boys just rip pajamas all the time.
Just ripping pajamas?
It's just like their knees are just ripped all the time because they're just animals on the floor and wrestling and all that.
That's probably the only position that they possess a differentiated strength in, I feel like, is the apparel compared to some of those other larger competitors.
And I think it's waning.
Yeah.
We do go to Target for a lot of that apparel stuff, and I think that a lot of people are saying, Walmart's doing a pretty good job of catching up to Target at a lower price point. And so that's in part why my wife loves going to Target, is because she thinks the apparel is better. But I haven't been hearing that same message from people quite as much. And I think between Walmart and TJX companies, TJ Maxx Home Goods, Marshalls, etc., they seem to be eating Target's lunch left, right, and center here.
And then you got Amazon too, not like the apparel side, but just those are kind of the big 3. And then if you're looking just for the best low-cost price, then it's Costco too. So it's just, they find themselves in a difficult spot from a positioning standpoint.
You know where they kind of find themselves? Now that I think about it more, it falls into that same category that we've talked about of a business that is not exactly targeting the low-income earner. Yeah. And they're not exactly going after the very high-income households either, which has been a success, right? If you're just targeting people making more than $250,000, you're doing pretty well recently, because that's a growing group who is feeling especially wealthy now because of the stock market growth. Target sits kind of in the middle here, and guess what? We've had a declining middle class here for the last several decades, and that I don't know. I just don't know what position they are serving these days. Walmart is more and more eating up some of their I guess allure as a special brand.
Well, also Walmart's blowing it out of the water in terms of the e-commerce development that they had. They've really invested a ton in building out their infrastructure for pickup and delivery to compete with Amazon. And again, that pivots back to Target. You don't really feel like you have the same sort of strategic advantage for their business model compared to some of the peers. It's much more of an in-shopping experience typically that you think of for Target.
In any case, the company's been on a cost reduction push for the last year. They said that they reduced the price of more than 10,000 items last year. They said their comp sales on e-commerce rose by 8.7% in the latest quarter, while sales from stores fell 0.5%, and that's still driving a good chunk of those overall sales. Target stock has been jumping around all over the place. At one point, it was off more than 6%, currently off about 5% in trading. That brings it down 16.5% for year to date and over 20% over the course of the last 12 months.
Can I tackle a listener question real quick here who had texted into the show on the tariff front?
Yeah, please.
Briefly here. Listener had asked, will tariffs have a positive impact on our federal deficit? The short answer is yes, it would, but the size of that is not as large as you may anticipate. I was looking at some statistic earlier today that these measures that we're talking about, the tariffs on the imports from Canada and Mexico and China, this was from earlier in February, so the number may be higher now with some of the additional tariffs on China, would be about $140 billion that would be raised through these tariff measures. Mike, I'm not sure if you've seen different figures, but to the point being of, that would eat into our deficit, but we operate at a $2 trillion deficit. So to be clear, this is not the end all be all in terms of resolving the deficit problems that we have.
Yeah, and now, of course, all eyes also turning to tax cuts and what is going to be the promise there. And this is where, again, this formula gets really complicated, right? What goods are going to face import tariffs? How long will they be in place? If they are in place for long term, how much of that economic drop in activity, because let's call it what it is, it's a tax. It's a new tax, and if you use it to pay off the deficit, I like what that does for the long-term economy, but it's not great for the short term. It just means that the government is then spending net a little bit less on the economy, and which that could lead to contraction. But if you at the same time reduce taxes across the board, what positive effect could that have on the other side of all of this? So a whole lot more to come on this story, including how serious are we about these over the long term once those costs really start to be absorbed by American households. We won't start getting data on this at the earliest until April.
Right.
We are a full month out from any reasonably useful data when it comes to how much consumers are bearing the cost of tariffs. And so I'm not sure, there's a lot of people guessing that, hey, these aren't going to be here long term. It's going to turn around. Well, I'm not so sure, because that conjecture around the real effect on American households, nobody's going to know anything until probably April or May in the first place. And that's in all likelihood when you could see this show up and when the Fed needs to start addressing it and things along those lines.
Yeah, and you make a good point. To be clear, that estimate that I was throwing out there in terms of the reduction to deficit or revenue raised, assume that the tariffs are in for the rest of the current fiscal year, which is a massive assumption.
Indeed. Let's take a quick break. When we come back, going to have a bit of trivia for you next on the Financial Exchange.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699. Or you can request the guide online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In today's economic climate, managing your finances can be a full-time job. This is Mike Armstrong from the Armstrong Advisory Group, and our experienced team of advisors understands the challenges that exist and the questions you may have when it comes to your own financial strategy. Our new guide is called What Can a Financial Advisor Do for Me? In it, we'll help you find answers to some of those questions. At Armstrong Advisory, we can provide you with information that may help you with decisions about your investments. Our team can also advise you of the need to work with a professional in other areas, such as taxes, estate planning, or insurance. Understanding the role these elements play in a well-rounded financial plan is extremely important. Give the Armstrong Advisory Group a call at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bench you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Time for trivia here on the Financial Exchange. And on this day in 1933, FDR was inaugurated as the 32nd U.S. president. FDR pledged to pull the country out of the Great Depression, stating in his inaugural address that the only thing we have to fear is fear itself. Trivia question today: who did FDR beat in the 1932 presidential election? Once again, who did FDR beat in the 1932 presidential election? Be the 6th person today to text us at 617-362-1385 with the correct answer. And you win a Financial Exchange Show t-shirt. Once again, the 6th correct response to text us at 617-362-1385 will get that t-shirt. See complete contest rules at financialexchangeshow.com.
We have a Federal Reserve meeting coming up in almost exactly 2 weeks, Paul. And guess what? I know what all of his questions are going to be about. March 19th will be the next Federal Reserve meeting. As of right now, there is an 89% probability, according to the CBOE, Chicago Mercantile Exchange, that the rates will stay exactly where they are. 89% chance that they stay where they are. 11% chance they are cut. That is up pretty significantly from just a week ago prior to the tariffs being enacted, where that was sitting at only a 4% chance of a cut. So if you are interpreting all of that, this one market, as I read it, is more worried about the recessionary effect of implemented tariffs and perhaps some other data that came out over the course of the last week, consumer confidence, ISM manufacturing, to name a few, than they are about the inflationary effect of the tariffs. Because if they were more worried about the inflationary effect, you would see a more propensity for rates to go up in reaction to this rather than them coming down. So that is the read from this market. If we fast forward out even further now, wow, that was a lot of Fs. You now have about a 50-50 chance of rates being lower by that May 7th meeting. That is, again, up pretty substantially from where we were a week ago, where it was still only a 25% chance that rates were cut by that May 7th meeting. So big swing in expectations on interest rates, and kind of matches what we are seeing in terms of the bond market right now. We've talked quite a bit about, forget the Federal Reserve rate. That's a rate that almost nobody actually faces. But when we talk about things like mortgages, like car loans, we're more referring to the 10-year Treasury. The yield on the 10-year Treasury as of early trading now down below 4.2%. We're sitting at 4.14% on the U.S. Treasury. Trying to think the last time we got this low. Were we last summer? Let's take a look here.
Well, we spiked big time
late last year. Yeah. So we spent most of the late summer and early fall below that 4% range. That was when you did start to see mortgage rates again approaching that low 6 range. Third and beginning of the fourth quarter of last year. As of this morning, according to Mortgage News Daily, you've got rates sitting at about 6.74% on the 30-year fixed. I expect to see that come down further tomorrow on this bond market move. The piece from Market Watch, however, I'm not sure I agree with. It's about how Trump's tariffs and tax cuts could leave the Fed unable to do its job, and I'm not sure I agree. They have this job of maintaining stable employment and prices. I agree that these things will challenge the Fed, and if we do slip into a recession or an inflationary environment, I'm not exactly going to line up to blame the Fed for it. But I don't see why tariffs are different than any other cause of inflation. Yes, it's self-inflicted, but the Fed is going to have to sit there and try and continue to weigh, okay, with this new policy, what's the bigger risk? Unemployment, inflation, both, and what do we do to react to it? So I don't think it in any way kneecaps what the Fed is trying to accomplish.
So oftentimes we're prisoners of the moment and feel as if this is, the worst of times. And just think about how difficult the Fed's job was back in 2020 when we had a global pandemic that we hadn't seen the likes of in 100 years.
Yeah, that was tricky.
How do you go and set monetary policy at this point?
Trying to figure, Jay Powell's trying to figure out how to use Zoom for the first time ever. It's a mess.
This is something that has a lot of historical precedence. Perhaps we've been operating, of course, in a lower tariff environment over the last 80 plus years, but it's not economic concepts that are unheard of. So I would too push back against this notion that their job is they're unable to do it. I always reiterate this when I talk about it on the show. I sure as heck would not want to do their job because it's really very challenging, but that doesn't mean it can't be done.
Got kind of buried in the news over the course of the last 2 days, but DOGE and the Trump administration announcing some fairly significant cuts to the Social Security Administration. I was asked about it yesterday. Some 7,000 workers of the 57,000 approximately Social Security workers that are at the agency today, there's discussion of cutting those jobs. And the question was raised to me, okay, what does this mean for the average recipient? Is it going to mean delays? Is it going to mean worse customer service? Is it going to mean I'm not getting my benefits? And again, this is what happens when so much news gets thrown at you at the same time. People start to freak out. So first things first, let's separate two issues. Issue number one, the Social Security Trust Fund, if we continue along the current path, is going to run out of money in 10 years. If it runs out of money, there's only enough funds coming in from collected taxes to pay about 70 to 80% of benefits. So under current law, in approximately 10 years, every Social Security recipient would not be paid their full benefit amount that they are owed, because that is what the rules are stated to be. Separate discussion, the government is talking about cutting some of the fat at the Social Security Administration in terms of employees to the tune of 7,000 people. I don't know what that would do to their servicing time, but I'm guessing it would not increase the quality of customer service. That's just my guess. I don't know for certain, but my guess is that you're not going to have any improvements to customer service if you eliminate, what's that, 1/8 of the workforce there. Why this could matter in particular? Well, one of the really complicated things right now that Social Security is dealing with is the Social Security Fairness Act. So brand new bill passed back in January, eliminating the windfall elimination provision as well as the government pension offset. As part of that bill, what it said is that those recipients who are owed money will go back to January of 2024 and pay them back. That's a pretty complicated process. You got to figure out who those people are, where they bank. Do we already have, electronic funds transfer instructions on file, and start paying those people, some of whom have never been in the Social Security system before. So, average recipient, you're probably not going to notice anything with these changes to the Social Security Administration. New people to the system, first time signing up or owed money from all of this or trying to communicate with Social Security, yeah, that could get tricky. Quick break. When we come back, I want to talk a bit more about Social Security and the funding issues they face, along with Trivia Winner.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News & World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Trivia question today was, who did FDR beat in the 1932 presidential election? That would be Herbert Hoover. John from Harwich, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to John. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
We were talking a bit about cuts to the Social Security Administration that have been announced from the White House here. And instead, I want to focus a little bit more on Social Security in general and the design of the program and just where things stand these days. There's a piece in Market Watch, let's go with that, that interviews the man who in the 80s, under the Reagan administration, was tasked with fixing Social Security. He was the commissioner in the early 80s during the last major legislative reform that took place to Social Security. You could argue that the Fairness Act that passed in January was pretty major, but didn't really do anything to address long-term funding issues. And there are a few pieces that I found interesting. Obviously, in the 80s, this guy came under fire, just like anyone would today, for talking about benefit cuts. And his counterpoint was pretty simple. Look, this program was created in 1935. In 1935, the average life expectancy of a white male worker, which was pretty much the only people this was covering at the time, was 62 years old. At the time, full retirement age was 65. This was a program that was designed in 1935 to not really cover a lot of people. Most people would be dead by the time they filed for benefits. Today, as everyone knows, life expectancy is in the 70s. We have expanded benefits to a whole slew of different populations, the disabled, spouses of workers. We previously had some offsets in there for, spouses of government workers or government workers themselves that would reduce Social Security benefits. Those have gone away. And so his main argument here is, look, I recognize that the U.S. government made a promise to the American worker, but that promise was predicated on a very different setup when it came to the state of the American population. And so the program, as it did back in the 80s, faces some very real funding issues, in part because of how it was designed, in part because of how long we're living. A lot of different factors play a role in here. And the fact of the matter is that I would find one of the most discouraging things that we talk about to be the way our lawmakers are just refusing to address it in any real way. And why I think that's such a problem as opposed to other real issues that Congress has to deal with is with this problem, the longer you wait,
the more painful
the solution needs to be.
Right.
If you just fix the problem now and started refilling those buckets or cutting benefits now, I'm not going to sit here and tell you which one I think is the right way to go. But unless you're just going to run deficits up higher, which I hope all of us can agree is a stupid idea and a stupid way to solve this problem, you have to replenish the trust fund. You can do so by finding more workers to pay into Social Security. Good luck. You can do so by raising taxes. You can do so by reducing the amount of benefits that are coming out of the trust fund. Some combination of those different things is how you fix this problem. And instead, we're having conversations like, well, maybe we shouldn't tax benefits anymore. Again, maybe we shouldn't, but can we have a conversation that's genuinely about, okay, we're not going to tax benefits anymore, and this is how we're going to replenish the trust fund so it doesn't run out for our most vulnerable people in the population 10 years from now.
I thought this was a really good piece. In particular, he had some really strong insights because of all the experience. And one of the things that he mentioned is that when they raised the full retirement age, they did it for people who were 21 at the time, so their future retirement age would be raised by 24 months. So when you're 21, all of us can agree that's the last thing you're worrying about.
Barely sober enough to understand.
That's the last thing that you're worried about. But it was interesting to hear him say exactly what you just said, Mike. It's a simple system. There's two ways to think about it, fixing it: reduce benefits or increase taxes by raising the cap on Social Security. So right now it's capped out at, I believe, 160 to 165 when you no longer have to pay Social Security taxes. So those are the two things that you can focus on, or put more people in the system. But I'm not even going to try to make that a point that could fix everything. Or raise the full retirement age is another way to delay it out. But the problem, and we've talked about this a ton on the show, is that
just make it to age 80 and then, sorry, we're done here. We can't afford Social Security anymore, so see you later.
Something's got to be done. And it won't be touched by – it's frustrating. It's really frustrating because no one wants to be the bearer of bad news and touch it.
This is the type of thing that I fully recognize, can get overblown because honestly, my honest assessment of Social Security, if you're to pin me down on it, it is that lawmakers figured this out. Unfortunately, I think they figured it out in the dumbest way, which would be to just blow out the deficit even further in order to afford the payments. But I do think that they figure it out ultimately. That having been said, Social Security, it's a major source of folks' retirement income that they are planning for the future. There have been huge changes to Social Security over the course of the last 12 months, especially for workers in Massachusetts and Maine, and 7 other states across the country. But here in New England, Massachusetts and Maine, big changes that workers here are now facing because of the way that our states are structured. There are likely to be many more changes to the structure of this overall system as you head towards retirement. If you are staring this system down and trying to figure out what that means for your retirement scenario, please give the experts at Armstrong Advisory Group a call. We work with clients every day to assess that Social Security question and figure out what's the best strategy for your personal scenario. Because guess what? The best strategy for your cousin's neighbor who worked for the Social Security Administration for 15 years probably doesn't look all that similar to your personal situation. If you're trying to assess and have questions, give the folks at Armstrong Advisory Group a call. The number's 800-393-4001. Again, that's the Armstrong Advisory Group at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Walgreens Boots Alliance. Anybody still remember Walgreens? I mean, huge company. Obviously, I've got one in my town that I frequent. But all of the major pharmacy brands have been struggling, to say the least, over the course of the last 2 decades. They've faced mounting pressure both from the healthcare industry, where they derive all of their income on prescription drugs. Not that people aren't getting prescription drugs, but just that the markups and a lot of the rules around that sector have been coming under change. They've faced increasing pressure on the pharmacy side from home-delivered medications. Amazon invested in a major business. And then I probably don't need to explain to you that not as many people are going to Walgreens and CVS these days to buy their laundry detergent, diapers, and other items because I can click a button on Amazon. It'll show up 48 hours later. That has affected their front of store sales as well. Walgreens is apparently nearing a deal to take the $10 billion company private. It'd be a $10 billion deal being backed by Sycamore Partners. Could be completed as soon as this Thursday.
Yeah, Walgreens has been public since 1927 and reached a peak market cap of about $100 billion back in 2015. And as you alluded to now, going to be sold for in or around $10 billion or so. It just points to the fact that, businesses need to evolve over time, and the pharmacy industry has been one that has been really difficult. CVS has grappled with these challenges as well, not to the negative impacts that Walgreens has felt, but certainly it's an ever-evolving business, and now by going private, you'd think that makes it a little bit easier for Walgreens to operate and keep their business going.
Let's take a quick break here. When we come back, bit of stack roulette here on the Financial Exchange.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical medical conditions as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. By making a donation, you can support the Veteran Advancement Program, which offers permanent and transitional affordable housing to veterans and their dependents. The DAV of Massachusetts is the only DAV department in the country to lead a veterans housing initiative for single vets and those with families. Visit dav5k.boston to make a donation today, and make note for this year's 5K to be held on Saturday, November 8th. That's dav5k.boston.
Paul, have you ever had one of Canada's claim to fames, the ketchup potato chip?
I haven't. How will they be impacted by tariffs?
I don't know. Not strong. Not well. Could face some retaliation because I bought some on my way back from Canada, as I always load up on coffee crisps and ketchup flavored potato chips when I come back from Canada. Delicious.
You didn't bring any leftovers for the show?
I did not bring any. Actually, there might be an open pack of coffee crisps that I could bring in. I'll take a look around and see what I can get.
Never had one.
Exciting news. Are you ready for ketchup-flavored sparkling alcoholic beverages? Because Kraft Heinz is dipping their toe into booze. I'm joking, of course. They also own the brand Crystal Light, which is those kind of gross-looking lemonade dry packets that you pour into water to make lemonade, and then sell it to adults on the road for a huge markup for your lemonade stand.
Just sugar.
That brand, Crystal Light, which, again, maybe other people have a better opinion of that brand, but that's the one that they are going to be branding their new hard seltzers under. And initially, they're only going to have a lemonade and wild strawberry. And I think we can say that when Kraft Heinz gets into the game, the hard seltzer game is dead. Can we call that trend dead now?
These are just going to collect dust on a shelf.
I have a little affinity for these. I'm not going to lie to you guys.
Hard seltzers or the Crystal Light?
The Crystal Light thing. I kind of lived off it in college freshman year. Okay. So you would get...
So Paul has already made alcoholic Crystal Light is what he is referring to here.
Oh, heck yeah. So you'd be a freshman and you'd struggle to get a case of beer, so you were more often stuck with getting a very lousy vodka, whether it be Popov or some of the cheaper ones out there, Dubra. And so in order to drown out that awful taste, what we would gravitate to is the local food mart at our college had Crystal Light packets, which would dilute the flavor of it. So
are there any other crimes you'd like to admit to on live radio before we move on, Paul?
I wouldn't drink it, but I would just make it for my friends.
Yes. That's it.
That is the newest news from Kraft Heinz, who has been struggling to really differentiate over the course of the last few years, but nonetheless very late to the canned alcohol game here. Crystal Light rolling out their wild strawberry and lemonade.
They've got one buyer
hard
out
seltzers. Paul Lane is going to be the sole purchaser of this, which might actually be fine.
How fast food apps are taking over drive-through. The launch of mobile apps for a lot of the major fast food chains began in 2009, where Starbucks came out with its mobile app. Ever since then, every single company out there, or primarily the biggest fast food companies, all have some sort of mobile app. But now people are using them to order for the drive-through line rather than speaking to that speaker box that most of us are so accustomed to. So instead of having to give their order, they're just telling the drive-through employee their name or a code in order to get their particular package. And the piece that they go into here in this article is this idea that the amount of mobile app adoption is extremely prevalent, particularly among younger consumers. There is a cost to that, where these mobile apps are free, but you have to fully acknowledge getting onto them that they are taking a ton of your data. And for
quick reminder, the mobile app is free.
Yeah.
If something's free,
you're paying.
Who's the product? You are the product. Good reminder.
So, for example, if you have the Taco Bell app, it has access to your social media accounts. It could use that data to better understand the demographics and inform its advertising and marketing activities. The same applies for other companies out there in terms of the access.
I'm going to quote this here. Buried deep in McDonald's privacy policy, to which all app users have to agree to before placing an order.
You didn't read the terms and services?
There you go. They now own your firstborn child. No, I'm joking. Quote, inferences drawn from collected data create a profile about a consumer reflecting the consumer's preferences, characteristics, psychological trends, predispositions. Hold on, it's torn a little bit here. So
sure, yeah.
Behavior, attitudes, intelligence. They're apparently measuring your IQ with all the data that they are getting. Abilities or aptitudes. As you mentioned, the Taco Bell app accesses your social media accounts. The amount of data that I have seen these apps alleged to collect, I don't work for McDonald's. I have no idea if they can actually see this. But one of the examples was given that, hey, this person always gets hungry around 2 p.m. and frequently is ordering from us. We also know, because of all the data that we're able to collect, that they get paid every Friday at 3 p.m.
Right.
So guess what we're going to do? We're going to start offering a not heavily discounted promotion from the app that's going to pop up on your phone the moment that your paycheck hits to your bank account at, a specific price. Where we are getting, what these apps are designed to do is get you away from going into the store and looking at the menu and analyzing all those prices and making a decision. Instead, I have no idea what prices Paul has versus what I have. There is no ability for me to know, hey, what's the price that Paul's going to pay if he goes through the drive-thru versus Michael goes through the drive-thru. And there's nothing necessarily illegal about anything that they are doing, right? If they want to give a promotion to Tucker this afternoon because they have, looked at his aptitude and determined that he is more intelligent than Michael and therefore is not going to fall for the garbage price point that they're putting on their McDonald's order. There's nothing illegal about that. They can go and do that and say, well, yeah, Tucker, he's a smarter guy, so we're offering him the bigger discount on that food item.
They know what's up.
These things are very convenient.
How many do you guys have on your phone?
I get Starbucks and Dunkin'.
Starbucks only.
Dunkin'
smokes Starbucks in terms of the app.
To be fair, I would absolutely have McDonald's on my phone if my wife didn't. We have a tradition every once in a while on Sundays. I take my kids to my hockey practice to go on the ice with me for like 5 minutes during warm-ups, and then as part of that deal, they all get McDonald's on their way there. So we order from McDonald's, almost on a weekly basis, and it is really convenient.
Yeah.
They offer all sorts of discounts. They offer all sorts of promotions to get on the app. But remember that once you have something downloaded on that phone of yours, I don't think that McDonald's is going to sell your bank account information to a hacker. I'm not worried about that. But they are going to legitimately build a very accurate profile of you. And if you're okay with that, fine.
Right.
If you're not, buyer beware. Read what you're actually signing up for.
The accuracy behind them, it is nice. When you have the mobile app, you're typically getting 100% order accuracy because of the way you're able to transmit that information.
I don't know, dude. They forgot my kids' apple slices the other day, and
those things are gross.
There was hell being raised on the. Oh yeah, it's a favorite part of these kids. Like apple slices more than
my kids like them too. I'm like, these are the worst apples out there.
Just buy the damn apple.
Skins removed.
Yeah, no, I know. It's just they look so dry and bad.
All right, we have gotten off subject, folks. Markets are making a bit of a rebound here. We are still strongly negative in early trading, but at one point, Dow, S&P, and NASDAQ were off quite a bit more than 1.5 percentage points. As we close out today's show, Dow currently off 660 points, 1.5%. S&P off 77 points, or 1.3%. The NASDAQ, where we're seeing the most recovery, off 154 points, a little bit more than 0.8% in early trading here. We'll have a lot more for you tomorrow, and tune in because this stuff is going to be volatile. It's going to move markets and could all change on a whim. So a lot more to come tomorrow on the Financial Exchange.